So we also have our YouTube and Facebook community who has joined us live right now. So what we are going to do, we are going to do a thorough market analysis right now, what the market is trying to tell us. So good morning everyone. We will be discussing on the market front that in the past 15-20 days, as we said, the markets has been quite volatile. So what is the view from here? What does the market tell me? And how are we going to react? So as you can see, these are the global indices Q, where we are seeing the US and the Europe market yesterday closed on a negative front, but we are going to open positive. That is a mildly flat to positive opening for the Nifty index. Now this is based on the GDP data which came out yesterday. Yesterday the GDP data of India came out, and we had a good 8.4% growth in GDP, which was above expectation. The expectations were somewhere around 8.1%, but we grew by 8.4%. So that was a positive territory in the volatile times. So that is a positive domestic factor what we had, and that is what impacting in the markets as well. So the global clues are still there. Volatility regarding the new variant, that is the Omicron virus. There are still things not clear about it. There are disputes. Some are saying it's very viral. Some are saying it's not that viral. So there is no clear-cut picture out there. And plus, our global domestic cues are seeing us positive momentum. So I think mix and match, the volatility is going to continue for the next 1 week or so. I think this is the best time where one should just sit and look at the markets, try to identify the support and resistance on a larger time frame. A larger time frame, I can say probably a weekly or a daily or an hourly. That is the kind of time frame you should look at for Nifty and Bank Nifty. So first, what we'll do as a protocol, what we do, we will analyze the Nifty and Bank Nifty first on a technical front, and then on a derivative front, so that we understand what actually the market is trying to tell us from the current levels. So what I will do, I'll just open the chart of Nifty over here. So I'll just go to Trading View. I will see the Nifty chart. What is the index trying to tell me? What happened actually yesterday, and what is the market trying to tell me based on that is what we are going to analyze. So I'll open the chart of Nifty over here. So this is Nifty for me, what I'm trying to open here. So this is the daily chart of Nifty, what I have opened over here. Now this is a technical classical pattern what we had seen in Nifty in the recent times, where we had seen Nifty had formed a head and shoulder pattern, which is a technical pattern over here. In this case, what we are seeing, this was the head over here, which was found. This is the left shoulder, and this was the right shoulder. And then we saw a breakdown over here in the head and shoulder pattern, and it almost achieved its target of 16,800, 750 on the downside, which are the targets over here. Now, Nifty at the current level, this is the 20-day moving average, which we spot on. So the 20-day moving average gives you a clear-cut direction what the market is trying to do. At the current levels, we are trading well below the 20-day moving average. So that is why I said no need to be aggressive long at the current levels. The trend, the 20-day moving average for the next 7-8 days will keep on consolidating in a sideways range. And eventually, if we break out of the 20-day moving average, that would be a buy trigger for me. So yesterday, what happened? The Nifty index, after this fall over here, it tried to bounce back over here in this day. That is, on this day, there was a mild bounce back on the Nifty index, which happened. That is on 29 November. Now on 30th November, that is yesterday, the Nifty tried to had a follow-up move, but that follow-up move failed for me. In the end, we eventually closed down over here. So this is the level now. Nifty has decided that 17,350, if you can see on the charts, this is my breakout level for Nifty. Nifty has to close above 17,350. The word close is very important. I am not saying it should trade above 17,350. It should close above 17,350. That is where I am seeing that we can see some further up move and we can test this 20-day moving average of 17,600. So 17,350 is my immediate resistance, what I'm finding on the Nifty front, and the low what it had made yesterday. Now that will act as an immediate support for me. That is 16,900. So 16,900 somewhere is my support, and 17,350 is my resistance on the upside. Now, one interesting fact, what I wanted to give you on the December series. If I compare the last 10 years data of December series, what has happened in Nifty in the December series? Always December has been a month where the index has closed always on a flat note. That means, say for example, if Nifty had opened at 17,000 levels on 1st of December, the December at the end of the December, Nifty even closed somewhere around 17,000 only. So there are moves where Nifty will go up, Nifty will come down, but eventually it will settle on the December expiry at 17,000, around 17,000 levels only. That is how December month has been always flat since the last 10 years. And December is where we see the US markets going for holidays. They have their Christmas vacation coming up. So that is where we will see not very much action on the buying side or on the volume front, and even that would impact the Indian markets as well, where FI goes on a holiday. So that is why December is a month where we are going to see some flat movement, or probably Nifty might expire after a volatile move, could expire at the same level where it started in the December series. So currently what we are seeing is extreme volatility in the start of the month, which is generally not there in the December series, but we have started with extreme volatility. Now we have to see whether this volatility keeps on settling down or whether it keeps on aggravating going forward. The consensus for the last 10 years have been that the volatility eventually comes down, Nifty settles on a flat note. But is this the time where it's going to be different? Like that, the time will tell you what the market is trying to do. But the consensus is we might see a flat closing for Nifty when it comes to the December series. So let us see. So as I said, my buy trigger comes about 17,350, 16,900, 800 is my support zone, which I will found over here. So as a protocol, as I said, since the markets are volatile currently, it is very important to know when not to trade in the market rather than knowing when to trade in the market. This I tell a lot of people, and these are the exact times where you have to just sit and not trade aggressively in the market. Just sit back and understand what the market is trying to tell you here. Once the direction is clear, that is the time you have to take a clear cut action in the market. So as a protocol, what I write down is my support zone, that is 16,900 to 16,800. 17,350 is my resistance zone on the upside. Now these are the technical parameters, patterns, what I have got over here. Similarly, on Bank Nifty, if I talk about, let us see what the Bank Nifty is trying to tell me. So I'll just open the Bank Nifty on the technical front. Now look at the Bank Nifty data. Now if I look at Bank Nifty, there has been a sharp and steep correction in Bank Nifty over here. And this line, what I have drawn over here, this is a 200 DMA line. That is a 200 moving average line, what I have drawn on the Bank Nifty. And it is exactly taking a support over here at the 200 DMA. So this is showing me that if 200 DMA is a very crucial trend changer for the market, if we are taking a support and taking a bounce from 200 DMA, that is a positive trigger for me. If 200 DMA is broken down decisively, then the market is going to see some sharp fall on the downside. We have already seen a very good fall in Bank Nifty, and we are trading somewhere near 200 DMA. The possibility of a bounce back are very high, and this is one more indicator, that is your RSI, which is in the oversold territory. It is somewhere trading around 28 levels. RSI range has 30 to 70 as an overbought and an oversold region. We are trading near the oversold region, that is 28, which is below 30. So we are definitely in an oversold zone, but we still have not got any buy confirmation. It is not that the market has given me a trend that it is going to go up. The trend is still not clear from the current levels. We have to wait for the trend to get established. In this case, again in Bank Nifty, what we had seen, a sell off over here, try to bounce back from the 200 DMA. Yesterday it tried to give me an up move, again it failed. Again it has made a resistance over here which is somewhere around 36,800. So this level of 36,800 is a crucial resistance for me. Once we close above, again I'm emphasizing on the word close, once we close above 36,800, that will be a trigger point that we might again go and test this 20-day moving average of somewhere around 38,000 levels on the upside. So for me as a trader, if one wants to be aggressively long on the index, look at the levels of 36,800. Above that, that will be a buy trigger for me when it comes to Bank Nifty. So my resistance for Bank Nifty, I will write it down 36,800 as a trigger point for me. And on the downside, the recent low that is of 35,500, 400, what it had made, that is will be my support zone over here. So 35,500 and 35,400. This is what I will write as a support zone for me on the downside for Bank Nifty index. So I have found a broad range based on a technical front for Nifty and Bank Nifty over here. Now, similarly, we can look at the data on the derivative front. What is the derivative data trying to tell me? Always compare your technical and your derivative data. That will give you a much more clearer view on the market, what the market is trying to tell you. So in this case, what we do is we definitely prepare something called as a morning cafe. This will give you a gist about what happened in the market yesterday. So if you look at yesterday data, this is the 2nd December expiry Nifty open interest concentration what we have over here. Now in this case, what you can clearly see over here, uh, if I just scroll down once, I will just erase. Yeah. Now what I'm trying to tell you is, now if you do, this is Nifty, this is Bank Nifty over here. In this case, 17,300 and 17,500. Now these are the two strikes where the highest call writing we have seen over here. So this is an indication for me, as I said, with my technical which was showing me 17,350, my derivative data is also showing me 17,300 to be my resistance zone. So if we cross 300, 350 decisively on a closing basis, that is where we are going to see the next up move, which will take the markets to 17,500 levels on the upside. And on the put side, I can see 17,000 put is the strike where the highest open interest is built up. But look at the difference between the open interest, that is the difference between the call and the put. The call is almost, you can say, double the put open interest. So the resistance is much more stronger compared to the support at the current levels. Now this has to increase and this has to decrease. That is where I will get a clear cut trend that people are ready to take this support strongly, and the weak hands on the resistance front, that is the sellers, are getting panicking over here, and we are going to see further up move in the market. So this is how you look at the derivative data as well, what the market is trying to tell you based on the open interest concentration in Nifty. So if I look at the derivative data over here at the current levels, what I get is a clear cut view over here that for me on a derivative front, 17,000 is a support and 17,300 is a resistance for me on Nifty over here. Similarly, if I talk about Bank Nifty as well, in this case, what we are clearly seeing, Bank Nifty, if you see, it has a slight different picture at the current levels. The open interest on 36,500 call strike, where the highest open interest is there, and the put side over here is 36,000 over here, and the second is 35,500. Now, when I compared this, these two had significant difference, but this two doesn't have significant difference over here. Now, what does this indicate to me? Now, this indicates that comparatively, Bank Nifty is much more stronger at the current levels compared to Nifty index. That means the put writers are also aggressively strong and the call writers are also aggressively strong at the current levels. Both are having equal amount of open interest concentration. A break on either side will clear a trend for me. If we break below 36,000 levels decisively and close below it, then the trend is going to negate. And if we go above 36,500, that is where we can see some swift momentum that could come in the bank nifty index over here. So in this case, what we are trying to do over here is we will note down these levels again on the Excel sheet over here. So 36,000 for me is a support zone and 36,500 is a resistance zone. So all the data points, now this is how you do your analysis daily over here on this basis, that this is my support zone on the downside for Nifty and Bank Nifty based on the technical and the derivative data, and this is my Bank Nifty range based on the technical and the derivative data over here. So what I have defined as a range for me, that Nifty is trading in a broad range where 16,800 to 17,350 is my levels over here. And when I talk about Bank Nifty, I will say 35,500 to 36,500 is a range for Bank Nifty for me. So this is a range what I have found out for the 2nd December expiry, that is the weekly expiry. A break on either side will change the trend. If we stay in the same level, we will continue trading in this range only. So breakout on either side is very important for further up move or down move. And if we trade in the same range, then the market is likely to consolidate. As I said, best time is over here to look at the market and watch the market. Don't try to be very aggressive in your trading patterns at the current levels. Just keep your analysis simple. Look at the markets. If you are not understanding anything, don't trade in the markets. Note down your support and resistance level like how I have noted down, and eventually once the breakout or breakdown comes, that is the point where you have to press the pedal on the accelerator and you have to trade aggressively. So this is what a small analysis what I wanted to do on Nifty and Bank Nifty. These are the levels which will help you out in your trading. Those who are trading in Nifty, Bank Nifty options, this is how the analysis has to be done, and this is how you keep your levels on your check. So this is what I wanted to show you guys based on the front what the market is trying to tell me from the current levels over here. Some of the stock ideas what I've got at the current levels, what people are trying to tell me is about Indian hotels. So Indian hotels is a stock where I've got some ideas sir what is Indian hotels trying to tell me. So I will just open the chart of Indian hotels. Now look at the chart of Indian hotels. This is a daily chart. I will just refresh the chart. So this was a triangle pattern which Indian hotels had formed. It gave me a breakout over here. As we can see, still we are trading below this 20-day moving average, which is a resistance for me. This was the previous support for the stock, which we had over here somewhere around 163, 165 zone. We saw some good volume buying at the current levels, but still the trend is not clear. I will say the stock is stuck in a range between 200 and on the downside the support is 170. So 170 and 200 is a range. If someone wants to buy at the current levels, keep a stop loss of 170 and one can look for targets of at least 200 on the upside, which is my resistance zone over here. So Indian hotel currently trading in a range. The RSI is still in an oversold territory. We can see a mild pullback that could come into the stock over here from the current levels. So this is where